Welcome back to Figure 9 Real Estate. Today we're going to continue going over what we like and why we invest in real estate and in multifamily properties in particular. The topic is real estate as a tangible asset.
So real estate as a tangible asset. What does tangible mean exactly? It means it has physical existence. So contrary to what MC Hammer might tell you, you can't touch this. So it has intrinsic value based on a physical existence. And that means it's real value. It's not theoretical value like you would have, say, in a book of business or client list. Also, because of that, value adjustments are based in the physical world.
And since real estate is based in the physical world, that brings with it an additional layer of security and allows you to take advantage of leverage. On the security side, it can't ever physically go away. It's always going to be there with some kind of minimum value. And then the big advantage on the leverage side is you can use it as collateral. So it minimizes the upfront cash that you need to get started investing in real estate. Different than stocks, bonds, or other investments, you don't have to purchase 100% of the value upfront. Real estate, you can typically only put down 20 to 25% of the purchase price in cash, and the remainder you can utilize some type of a loan or leverage to help increase your cash on cash returns. Finally, real estate has a reduced exposure to short-term world and industry economic fluctuations as the real estate market typically moves slower, and that gives you an additional layer of security.
So another layer of security is the downside protection you have. So let's look at inflation. The value of multifamily property keeps pace with inflation, and here's why. Because rents are a foundational component of the basket of goods for the inflation calculation. Rents are also the basis of the value for multifamily property. So as inflation moves up based on those rents, so does the value of multifamily property in exact correlation. So it's a great hedge against inflation. It also performs really well in a down market because people have to live somewhere. You're always going to have some type of money coming in through rent. Now that might reduce a little bit, but it never just stops and goes to zero. So value fluctuations based on that happen a little bit slower. So that gives you time to adjust your position and strategy.
Finally, one of the biggest advantages with real estate is the upside potential and value acceleration that you can take advantage of. Value increases are based on two key factors: market drivers like jobs and population growth, and property-specific improvements, things like paint, carpet, or other things that you can do to the property to increase the value. Depreciation on the balance sheet may go down to salvage value, but in the real world, if you keep track with these basic improvements, it's actually going to increase the market value or at least hold the market value. Finally, real estate is a tangible asset and improvements can be done over time. It's not like you have to redo everything as soon as the depreciation schedule ends. You can focus on the right improvements to create controllable and disproportionate increases in value relative to the actual cost of those improvements.
So let's quickly recap here. Real estate as a tangible asset. That means you can touch it. It's real. It's also got security and leverage potential. So it can't physically go away, so you have security there, and you can also use it as collateral, meaning you have access to leverage. There's downside protection because it keeps pace with inflation and it performs well in a down market. There's also upside potential because value is increased based on market drivers and property-specific improvements. You have a lot of control over the value. So those are just some reasons why we like real estate, and specifically as a tangible asset.
So I hope you found this helpful and interesting in understanding how we operate and look at and invest in real estate. If you're interested in partnering or investing with us, we'd love to hear from you. If you have any deals, projects, or opportunities you think might be a fit, please do reach out. Until then, we'll see you in the next video.
Talk to you soon.